Hi there, Serial Trader here. Let's have a look at weed as I believe it currently presents a very attractive trade setup, especially given the difficulty presented to a lot of individual names by the recent market action. A lot of charts have been very much disrupted from the patterns they appeared to be in, by the major indices falling down the way they have. So a lot of good setups kind of got spoiled. Um, and that's really not that unusual. If you see a couple different patterns, one on the indices and then a conflicting pattern on the individual names within the indices, well, typically the patterns on the indices have more weight, and that's certainly been displayed recently with this big sell-off we've had. But that being said, it's still nice to find individual names that appear to have little or no correlation to the broader market and have their own high confidence patterns. And it looks like weed fits the bill here. So right now, I've stripped this chart down just to focus on the pattern at hand here. So from our all-time high at 74.45, we've been doing a nice corrective sideways contracting triangle. So A down, B up, C down, D up. Looks like we might have a E in place, and now potentially ready to break out the triangle anytime now. Now what I've done is a triangle thrust measurement. That's what this line is. So that would bring us up to around 88 and change if we meet target. I've done the 1.382 reverse fib of the A wave, which brings us to 82.72. And then the 2.0 of the reverse fib, 96.09. So some pretty high targets from current levels. And we've just tightened up so much on this triangle. It looks like a break is imminent here quite soon, maybe within the next day or two, I would say. And there's always a possibility that the triangle breaks bearish, although this overall chart and everything else favors bullish continuation. So that being said, we'll go to CGC because this is where I've actually put on a position with this in mind. So CGC, exactly the same pattern, contracting triangle, A, B, C, D, E. Reverse fib for CGC is the 1.32 is 62, and the 2.0 is 72.42. The triangle thrust measurement for CGC gets us up to 68 and change. So from our current level of 47 thereabouts, that's a huge move. Now on CGC, what I've done is I've bought a straddle, okay, and we'll just go to the thinkorswim chart to look at that. So I bought the straddle, so the 47.50 calls and the 47.50 puts expiring next Friday. So that's 2 days, expiring 2 days after the legalization kicks in officially on October 17th in Canada. Now I'm kind of thinking here, we've been tightening up. We're on this contracting triangle, ready to break out. I think next week will be our catalyst with all the hype and excitement around legalization. I suspect we'll break bullish, although you can't be too sure of anything given the current market conditions. So because of that, despite having obviously a bullish bias for the breakout, also entertaining the possibility of a bearish breakout. But what I'm really counting on here is that this tightening range expands and we have movement in one of two directions, and I think that's a very high probability expectation. So that being the case, I bought the straddle, not just calls, at this point. So going back, the straddle at expiration breaks even on the downside. At expiration, breaks even at 42.69, 42.70, and at expiration breaks even at 52.30 on the upside. So if you get a good move in either direction, you'd likely close this before the expiration on Friday. And obviously, the farther away we are from expiration day, the less it has to move for us to break even. But that being said, taking it to the worst case scenario, taking it right to expiration, 52.30 to the upside, 42.70 to the downside. So let's look at the chart and see where that gets us. So break even, I'll just do some horizontal lines here. I believe I said 52.30 is break even to the upside. So let's just roughly nail that here. If I can just correct that to 5230. Coordinates 5230. Okay. I'll do another one at, I think I said, well, I'll check it again. Let's see here. 4270. Yeah, okay, 4270. So we'll correct that to 4270. Okay. So now I've illustrated on this chart the upside break-even point and then the downside break-even point. Okay. So it's not hard to conceive that once we break out of this contracting range, we'll easily exceed either of those two levels, depending which direction we break. And likely, we'll exceed, either the extreme up here or the extreme down here in short order once we actually break out. So I think it's a pretty good trade setup, given the current market conditions. It's not, overly biased to the long side. Obviously, that seems to be the more likely scenario. But you're covered both ways here. All you need is movement, and I think that's going to be a very likely scenario next week, is to get the movement in one of the two directions. So I just thought I'd present that as a good trade setup given the current conditions, and hopefully you can make some use out of that. All right, Serial Trader signing off.